Hey guys, welcome back. I hope you had a really great day trading today. So today was Wednesday, July 24th, and we saw some huge gap downs in the market. So I'm going to try something a little bit different. I'm going to switch up the format a little bit because it's just taken me a really long time to record these videos in the evening, all in one sitting. So I'm going to do a few videos each night, and the first one is going to be SPX and SPY. Then I'm going to take a break, have my dinner, come back, do QQQ, and if I have time, I'll do IWM and DIA. It's just taken me 6 to 7 hours each night, and I need to bring that back in a little bit. So I'm just trying this for now. We'll see how it goes. And if you guys can give me some feedback on if you like the new format, maybe you guys don't want to watch a 30-minute video about me talking about everything when all you do is trade SPY or QQQ or any of the others. So let me know what you guys think about the new format. And this first video is going to be SPY and SPX. And I have SPX pulled up right here. And we had some pretty wild gaps today. We did open SPX with a gap down. And this is the second gap down completely underneath the implied move. If you recall right here, when we made those all-time highs, last week, this was on Tuesday, and then when I put up the implied move, we gapped completely underneath it and we made this island top reversal pattern. Well, we saw a very similar move this morning where we gapped down completely underneath the implied move, and in both cases, the momentum was down. So apparently when you completely gap underneath the implied move, that absolutely destroys the calls up here, and we just see monster down moves after that. So honestly, I never really put that together because I don't remember seeing two island top gap downs, because see here we had the up gap. This was from Friday into Monday, and then we had that up day, and then we had that gap down underneath. So this is another island top. So after we gapped down, we dropped all the way down to the 50-day moving average. I did think we were going to hit that level really soon. I didn't really expect that it would be today. So 50-day moving average has been hit, and we did close down 2.32%. That is a huge move. That is usually the kind of move you see when VIX is around 25. We have VIX at 18, up 22.57%. That is also a really huge and a very rare move. A lot of times when you have VIX up that much, it does slow down the selling because that is premium to sell into. So selling puts to open new positions. So it's likely that from here we'll see a little bit of a slowdown, even if we do remain bearish. Well, those burn up a little bit, so we will see. So VIX up 22.57%, and we did not even touch the implied move today. And like I mentioned yesterday, we opened with that gap down and that momentum shift right away. It was very clear, that 35 EMA pointing straight down. You can see when we're bullish, it's usually not at such an incline, even though here it was. This was the 4th of July rally. We did have that same angle to the upside, but we did get that shift down today, and market just got slapped down after that. So big down day today in the S&P 500. So SPY, I just want to take a quick look and see if there's anything here. The only thing I just wanted to re-stress here is that when we drop that 35 EMA underneath the 30-minute 200 moving average, and I stress that that is a bearish close because we didn't see that swing back up. This is what I mean. We can have a up gap and a huge up day and close bearish, and you can find that out just by paying attention where the 35 EMA is in relation to its 200 moving average. All right, so we did hit that 50-day moving average. And the big question that everyone is asking is, how low are we going to go? How low can this go? And of course, we're at the 50-day moving average, so that is very possible that we see a bounce here. And we also have support back here around that level. Back here, this was in June, we saw support around 542. But if we do zoom out a little bit further, and I'm going to take this back to SPX, and then on the 1 day, we can see that we have been bullish ever since. This is the April lows right here. We got back above that 35 EMA, and then that was our rally right here, above that 35 EMA. Today was the first day we brought it back underneath that 35 EMA. The momentum definitely shifted here. I did point this out yesterday. Stupid Willie on the daily time frame is giving us a red signal line. And if we add a Fibonacci retracement right here. So we did get underneath the first retracement level, 0.236. We have another one just underneath us. That would be 0.382. That's at 53.96. And a good healthy pullback is to the 0.5 level right here, which would be 53.12. So in the near term, I wouldn't be surprised if we see 53.12. And if I do this again on the weekly time frame, I think that we would probably bounce at that 0.5 Fibonacci level. But if we look at the weekly time frame, you could see that we also did get a red signal right here. That is the first time that Stupid Willie has turned red. That is in this week's candle since we saw it turn green right here. And if we put that Fibonacci on there from the bottom of October lows to right here, so this right here is going to be the April lows that we just talked about in the last one. So I gave you that the pullback targets for this. And if we take it back to the weekly, this is the October lows of last year. We have been extremely bullish since that moment. And if we are looking at a pullback from here, we haven't even reached a level 1 pullback, which would be 52.92. After that, we could still pull back to 50.66. And a 0.5 pullback is extremely, extremely healthy. That would take us down to 48.82. And obviously at each level, we would reassess. I'm not saying that we are going to pull back to those levels, but it doesn't hurt to at least know where the pullbacks are so that if momentum does keep us moving down, that we do have good targets to add to our position or sell puts or whatever your strategy is. So I'm going to post both of these charts on TradingView tonight, both on the daily time frame and the weekly time frame, so you have a reference going forward. All right, so that was SPX and SPY. Hope you guys survived today. I actually took a red day. It was not fun for me, but we all take red days, and that is just part of the game. And tomorrow is Thursday, and we do have GDP in pre-market and initial jobless claims. And then on Friday, we have PCE, core PCE, personal income, personal spending, and consumer sentiment. So in the next 2 days, we do have quite a bit of economic data coming out, so be aware of that. And let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like. And also don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. There is also a thank you button underneath the video, and if you took a trade that was amazing, paid you well, and you want to give back in appreciation, you can buy me a coffee by hitting that button. Super easy way to show appreciation. And also leave me a comment if you have any questions. I do get back to every single one of them. Alright, so starting in SPY, tomorrow's implied move is between 536 and 546. We have a $10 trading range tomorrow, and the 30-day average volatility is almost exactly the same as that. So 536 to 546, it's off by just a few pennies. And the implied move on Friday's contract is 534 to 548. So we have a pretty big trading range over here, about almost $7 in each direction. To the upside, the first level to look for is going to be this 50-day moving average. Huge level. It is actually a really healthy pullback that we saw that And if we get back above that level, then we have the 35 EMA that is currently outside of the implied move for tomorrow. I always say know where your 35 EMA is because we do tend to return to that level often. So for tomorrow, it is to the upside. And then the top of the implied move for tomorrow is 546, and top of the implied move for Friday is 548. And above all of that, we do have the new island top that we just made this week. So with that opening gap on Monday, we gapped up, and then this Tuesday into Wednesday gap back down underneath the Monday gap is just above tomorrow's trading range. So just like this other one above us, that when we came back up to that level, we got pushed away. This is likely to be a resistance, and if we do push into that level, it's likely to be a battle zone. So a lot of resistance to the upside. I am expecting a technical bounce at this level, so just be aware of where all of the resistance is to the upside. And then underneath us, we do have this up gap. This goes back to June, where we saw that up gap where we had CPI, PPI, and then FOMC, and we had that huge rally. So that up gap, the bottom of that gap is at 536. It's actually closer to 537, and a little bit under 540 is the top of that gap. And this is a pretty decent sized gap. It could definitely offer us some support. It is almost $3 wide, not nearly as big as these down gaps, but that inflation data gap right here is at the bottom of the implied move tomorrow. If we do get underneath that, 536 is the bottom of the implied move. 534 is the bottom of Friday's implied move, and then momentum is down right now, but we are oversold. And what do we have here? The 4-hour 200 moving average, which we have not seen in quite a while, is underneath all of that. I am going to say that I do think we see the 4-hour 200 moving average soon. I said that about the 50-day, and we saw it the next day. I don't think we're going to see this tomorrow, but the 4-hour 200 moving average is down here, and we are overdue to catch up with it. If we don't drop to it, then it's possible that we stay sideways maybe for a little while we wait for this 4-hour 200 moving average to catch up. And I'm actually going to switch over to the 4-hour time frame because we closed underneath the 50-day moving average, which is the 2-hour time frame, and we closed underneath that. So we are on the 4-hour time frame. So let's just take a quick look at that really quickly and see if there's anything that we can see. So we have not touched back down with the 4-hour time frame since April. So yeah, we are definitely due to see that level in some form. Again, that could be some sideways trading while this catches up, or we could just drop to it and get it out of the way. So that is SPY, and then SPX. The implied move over here for tomorrow is between 53.75 and 54.80, and that is from options. The 30-day average is just a little bit wider, and I did actually take that wider range. So both 30-day average and implied move are the same. And on Friday's contract, 53.55 to 54.95. To the upside, again, we have that 50-day moving average, same as in SPY. If we get above that level, I personally think we will. We could see it as resistance though, but if we get above, we do have the 35 EMA. So when we open, keep an eye on this level. It's going to be coming down from the top and could definitely act as a resistance. We are trading underneath it and with the 35 EMA underneath the 30 minutes. So this is our resistance. And if we do get above that, top of the implied move is 54.80. Top of the implied move on Friday's contract, 54.95. And then above all of that, we do have that second island top, which is the up gap from Friday going into Monday, and then that down gap Tuesday going into Wednesday. That was today's down gap. So that is an island top, and that tends to be a battle zone. If we do find ourselves up there, we have that 1 hour 200 moving average in there as well. So make sure you have that on your chart. And then to the downside, we do have this gap again. This is the CPI, FOMC, PPI from June gap right here. And we did find support on that after CPI came out, and before FOMC right here. And the top of that gap is 54.02, and the bottom is 53.75. Bottom of the implied move, 53.75, and bottom of the implied move for Friday is 53.55. You could see this level right here. That is the 4-hour 200 moving average. It's been a long time since we've hit that level, and I think that before this correction is over, we definitely see that level. It doesn't have to be tomorrow. It doesn't even have to be next week, but I do think we will see that level sooner than later. All right, and somebody from the comments yesterday had asked me, knowing this information, how do I trade these levels? Let me actually pull up the comment. Okay, so let me get set up here. This, I switched back to SPY. So the comment reads, would it be possible to make a video on how you would normally play these ranges? And then somebody else responded, same question, with given knowledge, how do you translate to trades? So the implied move is the move that options are expecting an 85% chance that we close within. So for tomorrow, which is Thursday, that is between 5:36 and 5:46. And on Friday, that is 5:34 to 5:48. So if I was going to trade this range, you can do it in a bunch of different ways. If you're bullish and we open flat with momentum going up, then maybe you want to buy calls at 5:46 or maybe 5:48 on the next day's contract. If you're bearish, then maybe you want to buy 5:36 on tomorrow's contract. If we find ourselves down here at the bottom of the trading range and you're calling bottom, you think we're going to swing back up to close within the trading range, then you could sell 5:36 and maybe 5:35 spreads. Or if we get even lower, you could sell 5:35, 5:34 spreads in hopes that we swing back up. And if we move up to the top of the trading range and we're showing signs of exhaustion, then maybe you want to sell 5:46 bear call spreads. That would be selling 5:46, buying 5:47. Or if you want to get even a little bit safer, if we're at the top of the implied move and you want to move it up a strike, you can sell 5:47, buy 5:48, and then you're hoping that we get back into the implied move here. Or maybe you have long in the money calls and you're hedging with the top of the implied move. So if we make the entire implied move, then you'll close out your long calls. There are so many different ways to play these trading ranges. And what I'm doing is just showing what the average move is per day and what options are saying that is expected. So hopefully I explained that well. There are so many different ways to play this, and you guys let me know how you use these ranges. All right, so that is SPY and SPX. I'm gonna get this video uploaded, I'm gonna go have dinner, and then I'm gonna come back and do QQQ. And if this is all you're watching for today, have fun, trade safe, make sure you take profits when you're up, and I will see you guys